AI predicts stock trends for beginners, Wall Street's secret, or how I learned to stop worrying and love the algorithm. Mostly, remember those old movies? The ones where Wall Street was a smoky, mahogany-paneled temple guarded by men in pinstripes who spoke in cryptic financial tongues, clutching ticker tape like sacred scrolls? Where fortunes were made on whispered tips over 3 martini lunches and gut feelings honed by years of staring at flickering green numbers. Yeah, throw that image out the window. Welcome to the 21st century stock market, where the new oracle isn't a grizzled trader with a sixth sense. It's more likely humming away in a data center powered by silicon and statistics, possibly named something like Deep Trend version 3.7, or, if its creators had a sense of humor, Prophetess Maximus. The Wall Street secret whispered now isn't some illicit tip about a biotech startup. It's the open, yet often bewildering, reality. Artificial intelligence is fundamentally reshaping how stock trends are predicted, and it's not just for the hedge fund titans anymore. For beginners, this is simultaneously thrilling, terrifying, and potentially hilarious. Buckle up, grab your metaphorical popcorn, or a stiff drink, depending on the market volatility, as we dive into how AI is playing the market and how you, yes you, can peek over its digital shoulder. From gut feeling to gigabytes, the not-so-secret history. Let's rewind briefly. Traditional stock analysis relied on 2 main pillars. 1. Fundamental analysis. The what is this company actually worth school. Think earnings reports, PE ratios, debt levels, management quality, essentially corporate financial forensics. Requires patience, deep dives, and a tolerance for dense documents. 2. Technical analysis. The charts and patterns tell the story approach. Trend lines, moving averages, head and shoulders patterns, RSI oscillators. It's like trying to predict the weather by studying cloud formations. Subjective, prone to interpretation, and often feels like reading tea leaves after 3 espressos. Both methods have merit. Both are hard. Both require significant time and expertise that beginners often lack. Enter the machines. AI, particularly machine learning, ML, and deep learning, DL, didn't just knock politely on Wall Street's door. It kicked it down with a server rack. Why? Because AI excels at one thing humans are spectacularly bad at: finding complex, hidden patterns in absolutely massive, messy data sets. We're talking millions of price ticks, every micro movement, every second, across thousands of stocks. Oceanic news and sentiment. Parsing millions of news articles, social media posts, yes, even Elon's tweets, financial blogs, and SEC filings in real time. Gauging market mood. Is everyone panicking about inflation or euphoric about AI chips? Alternative data. Satellite images of factory parking lots. Busy lot equals high production. Credit card transaction aggregates. Shipping container traffic. Even weather patterns affecting commodity prices. This is the spy satellite level of market intel. Macroeconomic indicators. Interest rates, unemployment figures, GDP reports, all fed into the digital maw. An AI model doesn't get tired, doesn't get emotional, no FOMO, or panic selling for Deep Trend version 3.7, and can process this fire hose of information 24/7, looking for correlations and predictive signals invisible to the human eye. It's like giving a super-powered microscope and a supercomputer to a team of hyper-literate, data-obsessed detectives who never sleep. How the magic, mostly, happens. Peeking inside the black box, sort of. Okay, so AI looks at a gazillion data points. What does it actually do? While the most sophisticated algorithms are complex black boxes, the core concepts beginners can grasp are: 1. Pattern recognition on steroids. Imagine showing an AI millions of pictures of cats until it can reliably identify a cat. Now, instead of cats, show it historical stock charts paired with what happened next. Price went up, down, or sideways. Show it this happening across different market conditions: bull markets, crashes, sideways grinds, alongside the news and economic data from those times. Eventually, the AI learns to recognize patterns that might precede similar movements. It spots subtle combinations of technical indicators coinciding with specific sentiment shifts that historically led to a rally, for example. 2. Sentiment analysis savvy. AI doesn't just read news, it understands tone. Using natural language processing (NLP), it can scan headlines and articles, determining if the sentiment is positive, breakthrough innovation, negative, accounting scandal rocks, or neutral. Aggregating this across vast sources give a real-time pulse of market emotion, a powerful indicator often preceding price moves. Think of it as the world's most efficient, caffeine-fueled gossip columnist, but one who actually provides useful analysis. 3. Predictive probability, not certainty. This is crucial. AI doesn't predict the future with 100% accuracy. No one and nothing does. What it does is calculate probabilities. It might say, based on historical patterns similar to the current data configuration, there's a 68% probability this stock increases by 5% or more over the next 10 trading days. It's shifting the odds in your favor, not guaranteeing a win. Think of it less like a crystal ball and more like a hyper-advanced financial weather app. 70% chance of bullish sunshine, with scattered volatility showers possible. 4. Algorithmic trading execution. Sophisticated AI doesn't just predict, it acts. High-frequency trading, HFT, algorithms execute trades in milliseconds based on micro-trends AI identifies. While beginners aren't doing this, thankfully, understanding that AI drives much of the market's short-term movements is key. Beginners, meet your potential robot sidekick. How you can play. So, how does a beginner harness this without needing a PhD in quantum computing or a billion-dollar server farm? The secret is out, and it's becoming surprisingly accessible. 1. AI-powered trading platforms and apps. This is the easiest entry point. Numerous platforms, e.g., Trade Ideas, TrendSpider, parts of platforms like interactive brokers, even emerging features in Robinhood and Webull, integrate AI tools. These might offer 1. Automated pattern scanning. Alert me when a stock forms a bullish engulfing pattern on high volume with positive sentiment. Saves you hours of manual chart staring. 2. Sentiment dashboards. Real-time gauges showing overall market fear/greed or sentiment on specific stocks you watch. Icon might be a smiley face melting into a puddle of tears during a crash. Mildly comical, highly informative. 3. Predictive signals. Simplified outputs like strong by signal, or potential reversal warning generated by their proprietary AI models. Crucial reminder, understand why the signal is given. Check the underlying factors if visible, and never treat it as gospel. It's a sophisticated suggestion, not a divine command. For risk assessment tools, AI can estimate potential downside risk based on volatility and other factors, helping beginner-sized positions appropriately. Hint, start small. 2. AI-driven research and news aggregators. Tools like Kavout, AlphaSense, or even advanced Bloomberg terminal features use AI to 1. Summarize lengthy earnings reports or SEC filings into key takeaways. 2. Surface the most relevant news articles impacting a specific stock from the daily deluge. 3. Identify emerging trends or themes across the market you might have missed. Think of it as having a super efficient research assistant who reads everything so you don't have to. 3. Robo-advisors, the AI portfolio managers, while not strictly predicting trends for individual stock picks, robo-advisors like Betterment or Wealthfront use AI algorithms to build, manage, and automatically rebalance diversified portfolios based on your risk tolerance and goals. It's AI handling the heavy lifting of asset allocation and trend following within a diversified strategy, perfect for hands-off beginners. The hilarious and terrifying caveats: why AI isn't your fairy godmother. Now, for the comical reality check, because the market loves humbling everyone, silicon-based or not. Garbage in, gospel out. AI is only as good as the data it's fed. Feed it biased data or data from unprecedented events, like a global pandemic, and its predictions can go spectacularly wrong. Remember when an AI might have interpreted people panic buying toilet paper as a bullish signal for pulp futures? Yeah, context matters. An AI trained only on bull markets will be utterly flummoxed by a crash. Black box blues. The AI says buy, but why? Often, the most complex models offer little explainability. You get the prediction, but not the intuitive reasoning a human analyst might provide. This can be unnerving. Blindly following an AI signal you don't understand is like trusting a self-driving car built by someone who won't tell you how the brakes work. The self-fulfilling prophecy and sabotage: if enough people use similar AI models acting on the same signals, they can trigger the predicted move simply by piling in or out together. Conversely, savvy humans might try to spoof the AI by creating fake sentiment or patterns to manipulate prices. It's a digital arms race. Overfitting, the algorithm that loved too specifically. Sometimes an AI model learns the noise and historical data too well, the random fluctuation specific to that period, rather than the underlying signal. It becomes amazing at predicting the past, but useless for the future. Like training a dog to only fetch a specific red ball on Tuesdays. Change the ball or the day, and it just stares at you blankly. Unknown unknowns still rule. A black swan event, a geopolitical shock, a sudden CEO scandal, an alien invasion. Hey, we're being comical. Can blow even the best AI model out of the water. No algorithm can perfectly account for the truly unforeseeable. The market remains gloriously, terrifyingly chaotic. The emotional investor versus the unemotional AI. You see an AI strong sell signal on a stock you love. Maybe you grew up with the brand. Do you listen to the cold, logical machine? Or does your gut and nostalgia scream hold? The battle between human emotion and algorithmic detachment is where much of the comedy and tragedy of modern investing plays out. Watching someone argue with their trading app is peak 21st century entertainment. The beginner's playbook, harnessing the secret wisely and without losing your shirt. So, you're a beginner, armed with the knowledge that AI is a powerful tool. How do you use this secret without becoming a cautionary tale? 1. Education first, AI second. Understand the basics of investing, risk management, and different asset classes before relying on AI signals. AI is a powerful assistant, not a replacement for fundamental knowledge. Know what a PE ratio is before you let an algorithm tell you to buy based on it. 2. Start small and simulate. Use paper trading accounts, fake money, offered by many platforms to test AI tools and your understanding of their signals. When you go live, start with very small amounts you can afford to lose. Treat it like learning to drive. Practice in the simulator before hitting the highway. 3. AI is a compass, not an autopilot. Never blindly follow an AI signal. Use it as one input among others. Check the underlying news, the fundamentals, the overall market trend. Does the AI suggestion make logical sense to you, even vaguely? If it feels like betting on a one-legged horse in a glue factory, maybe skip it. 4. Diversify relentlessly. This is the golden rule AI can't break for you. Don't put all your money into one stock, even if the AI gives a 99% to the moon rating. Spread your bets. AI helps pick potential winners, but diversification protects you from inevitable losers and unforeseen disasters. 5. Beware the hype and the price tag. Not all AI tools are created equal. Some are genuinely sophisticated. Others are just fancy moving averages with a buzzword label. Research the tools and understand what they actually do. Also, be mindful of subscription costs. Ensure the value justifies the price for your level of investing. 6. Embrace the long term. AI excels at short-term trend prediction, but the market's most reliable wealth builder is long-term investing in solid companies or funds. Use AI for tactical entries/exits or idea generation within a solid long-term strategy, not as a get-rich-quick scheme. Remember, even the best AI can't repeal the laws of compound interest needing time to work. 7. Keep your sense of humor. The market will humble you. AI predictions will sometimes be hilariously wrong. Your own decisions will backfire. Learn to laugh at the absurdity. It's healthier and cheaper than smashing your keyboard. The not-so-secret-anymore conclusion: democratization, not domination. The real Wall Street secret revealed by AI isn't a guaranteed path to riches. It's democratization. The sophisticated data analysis and pattern recognition once available only to elite institutions with supercomputers and PhD quants are now increasingly accessible to beginners via apps and platforms. AI is a powerful equalizer, leveling the information playing field. However, it doesn't eliminate risk, the need for education, or the inherent unpredictability of markets driven by human psychology and global events. AI is a phenomenal tool, a super smart, ultra-fast, unemotional in turn, sifting through the data deluge. But you remain the CEO of your portfolio. You set the strategy, long-term growth, income, you manage the risk, diversification, and you make the final calls, sometimes overriding the robot. So, embrace the AI revolution in stock prediction. Use it to identify opportunities, manage risk, and save time. Be amazed by its capabilities. Laugh nervously when it gets things spectacularly wrong. But never forget the core principles. Invest wisely, diversify constantly, think long-term, and never risk money you can't afford to lose. The future of investing is human intelligence augmented by artificial intelligence, not replaced by it. Now go forth, beginner, armed with the not-so-secret-anymore secret, and may your algorithms be ever in your favor. Mostly, just maybe keep that day job for a little while longer. If you found this video informative, please like and subscribe. It will really help this channel out. Thank you for watching. Stay tuned for more informative videos coming.